a split-screen composition. On the left, a serious photo of President Trump speaking at a podium. On the right, a stock market ticker board showing defense company tickers, LMT, RTX, NOC, in bright red with downward arrows. Narrator, welcome back to the channel, everyone. We have got a massive developing story today, and honestly, it's one that is shaking the absolute foundations of the American military-industrial complex. Usually defense stocks are the boring part of the market, steady, reliable, predictable. But that all changed this week. In a move that has sent absolute shockwaves through Wall Street and the halls of the Pentagon, President Donald Trump has issued a stunning ultimatum to the nation's largest defense contractors. It all started on Wednesday, January 7, 2026. The president took to Truth Social, and shortly after, followed up with a sweeping executive order. The message? It was loud, it was clear, and it was aggressive. The era of easy money is officially over. President Trump has ordered an immediate halt to stock buybacks and dividends for any defense companies that are failing to deliver on time. He didn't mince words either. The president basically came out and said, "Look, military equipment just isn't being made fast enough." He accused these massive corporations of prioritizing their shareholders, people holding the stock, over the actual safety of the nation. The market reaction? Instant panic. Shares of giants like Lockheed Martin, Northrop Grumman, and RTX, which you used to know as Raytheon, tumbled in after hours trading as investors realized this wasn't just political rhetoric. This is a fundamental change to the business of war. So today, we're going to dive deep into what this order actually says, and more importantly, exactly how this is going to devastate the current financial models of these defense giants. So, let's take a second to break down exactly what this executive order entails, because the devil is really in the details here. This isn't just a polite request or a suggestion. It is a strict directive with a very tight timeline. The President has ordered Defense Secretary Pete Hegseth to immediately kick off a review process. Here is how it works. Within the next 30 days, the Pentagon has to identify every single defense contractor that is currently underperforming. Now, you might be asking, what counts as underperforming? Well, according to the text of the order, it applies to any company that is behind schedule, running over budget, or failing to invest their own capital into production capacity. Once a company gets flagged on this list, the clock starts ticking. They have only 15 days, just 2 weeks, to submit a remediation plan to fix the mess. If they don't do it, or if the Pentagon decides the plan isn't good enough, the penalties kick in hard. The one making all the headlines is the ban on stock buybacks and dividends. These are the main ways these companies return cash to their investors, so cutting them off is a huge deal. But there is a second penalty that hits a bit closer to home for the leadership of these firms. The president has threatened to cap executive compensation at $5 million. Now, I know $5 million sounds like a fortune to most of us. But you have to understand, for a CEO of a major defense prime who might typically earn $20 or $30 million a year, mostly in stock options, this is a massive pay cut. The order effectively says, if you can't build the weapons we need on time, you don't get paid like a superstar. You have to ask yourself, why is this happening right now? Well, context is everything. For years, the Pentagon has been complaining about the slow-moving nature of the defense industry. We've seen massive, expensive programs like the F-35 Joint Strike Fighter and the new Sentinel intercontinental ballistic missile just get plagued by delays and massive cost overruns. Take the Sentinel program, for example. It's managed by Northrop Grumman, and it was reported to be a staggering 81% over budget and years behind schedule. In the president's view, while these delays were racking up, the companies were still patting themselves on the back and rewarding themselves financially. He pointed out that while the U.S. undoubtedly makes the best equipment in the world, our production lines are simply too slow to meet the demands of a dangerous new world. This all ties into the president's broader vision for what he calls a dream military. He has proposed increasing the defense budget from $1 trillion all the way up to $1.5 trillion. That is a lot of cash. But he has made it incredibly clear that this extra money is not a handout. It's contingent on results. He wants to see new and modern production plants, actual hard assets, not just financial engineering happening on Wall Street. He is essentially saying, show me the factories or you don't get the funding. Now, while this order applies to the whole industry, there was one company that got singled out by name, and that's never a good spot to be in. President Trump specifically attacked Raytheon, which is now known as RTX. In a separate post, he called them out as the least responsive to the needs of the Department of War. He accused RTX of being the most aggressive when it came to spending money on shareholders rather than meeting the demands of the military. And the threat here was existential. The president warned that if RTX does not step up and start investing up front in plants and equipment, they will, quote, no longer be doing business with the Department of War. Just think about that for a second. This is a level of direct presidential intervention we have rarely seen in modern history. For a company like RTX, which relies on government contracts for a huge portion of its revenue, this is a do-or-die moment. Losing those contracts would be catastrophic. It sends a terrifying signal to every other board of directors in the industry. If you become the nail that sticks out, the hammer is coming down, and it is coming down hard. So let's get to the core of what you guys are asking about. How does this specifically affect the companies financially? To really get this, you have to understand why investors buy defense stocks in the first place. They aren't usually buying them for explosive growth like a tech stock. Historically, companies like Lockheed Martin and General Dynamics are considered safe havens. They pay reliable, steady dividends quarter after quarter. In fact, Lockheed Martin recently raised its dividend for the 23rd year in a row. Investors, and we're talking about pension funds, retirees, maybe even your own 401k, flock to these stocks because they provide regular income. If the government bans these dividends, that entire value proposition is destroyed overnight. If you take away the dividend, the stock suddenly becomes much less attractive to hold. We are already seeing the result, a massive sell-off. And this creates a dangerous cycle. As the stock price drops, the company loses value. It becomes harder for them to raise money or borrow capital because they look like a riskier bet to the banks. This is the chilling effect that industry analysts are so worried about. If investors flee the defense sector because they're scared, who is going to fund the massive new factories the president wants? The companies might find themselves cash poor right at the exact moment they need to spend billions on new infrastructure. Beyond just the stock price, this order forces a massive operational change inside the companies themselves. Up until now, a company might take its yearly profit and split it. Some goes to research and development, sure, but a huge chunk often goes to buying back their own stock to artificially boost the share price. President Trump is effectively seizing control of that cash flow. He is telling them, quite literally, you cannot send that money to Wall Street. You must send it to the factory floor. This means companies will have to pivot, and fast. We could see a rush of construction projects breaking ground as companies try to scramble and prove they are investing in capacity just to get off the penalty list. They might have to hire thousands of new workers and expand supply chains almost overnight. And while this sounds great for the economy and jobs, it is a logistical nightmare for the companies. You cannot just build a high-tech missile factory in a month. These changes take years to implement properly. The companies are now caught in a trap. They need to show immediate results to get their dividends back, but the improvements required are massive, long-term projects. It's like trying to turn a cruise ship around in a bathtub. So, how is the industry reacting to all this chaos? Silence. Absolute silence. Most of the major contractors like Lockheed, Northrop, and RTX have either declined to comment or simply haven't responded yet. But you can bet they are huddled with their lawyers right now, trying to figure out a move. There is a real possibility of legal battles here. Can the president legally tell a private company they cannot pay a dividend? It's a bit of a gray area legally. However, practically speaking, because the government is their only major customer, the companies have very little leverage. If they try to sue the president, they risk losing the contracts that keep them alive. It's a fight they probably can't win. We are entering a new era here. The old cost-plus model, where companies were basically guaranteed a profit even if they were slow or inefficient, is dying. The new model is strictly performance-based. Produce or perish. The government is done asking nicely. They're demanding results. To wrap this all up, the days of defense contractors being passive income machines for Wall Street seem to be on pause, at least for now. President Trump has drawn a line in the sand. He wants a dream military, and he is willing to break the financial knees of the industry giants to get it. For these companies, the next 30 days are going to be absolutely critical. They have to come up with a plan to build faster, or face a financial freeze that could reshape the entire industry forever. Thanks for watching, guys. If you found this deep dive helpful, make sure to hit that like button and subscribe for more updates on this developing story. Because trust me, this is far from over. I'll see you in the next one.
The information provided in this video is for general informational and educational purposes only. It is not intended as professional financial or investment advice. Always seek the advice of a qualified financial advisor with any questions you may have regarding your personal financial situation or investment decisions. The creator is not liable for any errors or omissions, or for any losses or damages you may incur as a result of relying on this content. Past performance is not an indicator of future results. Do your own research.